Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 22nd of November. We have a quieter week ahead of us, which starts with PBOC interest rate decision on Monday. On Tuesday, we should be on the lookout for Eurozone, UK, and also US preliminary manufacturing and services PMI data. Moving on, RBNZ interest rate decision and press conference will be followed by US durable goods, US initial jobless claims, and preliminary GDP quarter 3 figures, US crude oil inventories, in addition to the FOMC meeting minutes, and will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for ECB monetary policy meeting minutes and also Japanese consumer price index data for November. The week will finish on Friday with Australian retail sales figures. Now, let's take a look at few markets. Let's start with the Bitcoin. Bitcoin price action appears to be a sideways consolidation, which can potentially morph into a double top or a topping pattern with the neckline clearly defined here, pointing to 61,460 area. So round number and then 50 period moving average. And also we would have a falling resistance trend line here. So a cluster of things pointing to that area. Price action appears to be bearish below that level, so rally from this oversold market conditions into that level and a rejection, or a continuous selling pressure and the loss of these lows at 55,800 could open the way for a gradual move lower, targeting 55,000, 52,250, possibly even 50,000 to the downside. Alternatively, if you see a rally higher and a push and end of day close above 61,600, a breakout above that level, a retest from above could open the way for a short squeeze and a push higher. In that case, that will be a breakout above this falling resistance trend line, breakout above this neckline of this what potentially could be a topping head and shoulder pattern, and also there is a fib retracement here as well. So breakout, retest, and a push higher, targeting additional resistances at 65,600 on the upside, 68,900, 70,000, nice and round number, possibly even 72,260. This is DAX, or German 40 index, which is uptrending quite nicely, creating the higher highs and higher lows. The current price action appears to be a corrective pullback towards a rising support trend line. Key trading level going forward is at 16,100, cluster of these lows down here. Previous resistance, and now breakout and the retest of that resistance as a newly found support. As long as that level holds, 16,100, bulls are in charge, potentially opening the way for the extension to the upside, targeting additional resistances at 16,220, 16,300 current all-time high. Breakout above that, it's uncharted territory, 16,360, 16,400 and even higher. Alternatively, if you see selling pressure and a dip lower, in particular if we see the loss of 16,075, a retest of that level from underneath, therefore loss of this rising trend line, could signify deeper corrective pullback, targeting additional support at 16,000 to the downside, followed by 15,930. This is Nasdaq, or US Tech Index, which is also uptrending quite nicely. We can see the sequence of higher lows here. The current price is supported by multiple rising moving averages. Key trading level going forward is this previous all-time high, 16,450, call it 16,500, easier to remember. So pullback to that level and a rally would be bullish, or a continuous buying pressure and a breakout above 16,680 could open the way for the continuation of this bullish run, extension of this uptrend towards additional resistances towards 17,000, and this is just a guesswork. Your guess is good as mine. This is uncharted territory. Alternatively, if we see a dip lower and the loss of this rising trend line, in particular if we see the loss of 16,300 to the downside, push lower, a retest, and then rejection from there could open the way for deeper, more meaningful consolidation, targeting additional support to the downside at 16,180, followed by 15,950. Now let's talk about euro dollar. Euro dollar is downtrending. The current price action is creating a sequence of lower highs. It's capped by multiple falling trend lines as well. And the structure of this market appears to be pointing that bears are more dominant here. Sellers are more dominant. Key trading level going forward is at 1.1380, which is the cluster of these previous highs. As long as that level holds, bears are in charge. So basically rally from here into that level and the rejection or continuous selling pressure, loss of 1.1240 could open the way for the continuation of this selling pressure, targeting 1.12, 1.1140, 1.11 to the downside. Alternatively, if you see a rally from here and a push higher and end of day close above 1.1380, that could possibly open the way for the short squeeze, i.e. oversold bounce back and then retest of this additional resistance up here in the shape of the falling trend line and also the cluster of these previous lows towards 1.15, 1.1550 to the upside. Sterling dollar cable is also downtrending, capped by falling resistance trend line. This appears to be oversold bounce back. Key trading level going forward is at 1.34 to the downside. Previous low, previous lows, previous lows here. As long as that level holds, we could possibly see a continuation of this oversold bounce back and then retest of additional resistance towards the cluster of these previous highs at 1.3560, 1.36. Breakout above that level, short squeeze could trigger a push higher and then retest of this falling resistance trend line and additional major resistance at 1.37. Alternatively, if we see rally and a rejection, or if we see a selling pressure here, loss of these lows at 134, in particular 133.50, this current swing low here could open the way for another leg lower, targeting additional support to the downside at 1.3310, 1.32. Dollar Japanese yen appears to be very bullish. The price is creating a sequence of higher lows and higher highs. Overall trend is pointing to the upside. Key trading level going forward is at 113.70, which is the cluster of these lows. Previous resistance, 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 breakout, and this is now the retest of that previous resistance as a newly found support. So therefore, sideways consolidation, bullish breakout higher. As long as that level holds, bulls return and a push the price higher through 114.60. Breakout above that level and the retest of that level from above could open the way for the extension to the upside, targeting 115.20, 116, possibly even towards 116.80. Alternatively, if we see a selling pressure, loss of these lows, and in particular loss of 113.30, 113 to the downside, that could open the way for more meaningful and a deeper corrective pullback towards 112. Let's talk about gold. Gold appears to be quite bullish at the moment. This appears to be a sideways consolidation after retesting significant, psychologically important 1875 level. Bulls appear to be in control here as long as 1830 level holds. So that's a major support to the downside. So if we see a rally from these levels and a breakout above 1870, 1875, that could open the way for the spike higher continuation of this buying pressure towards 1900, so 1890, 1900, possibly even 1914 over a medium time frame. Alternatively, if you see a continuous selling pressure, loss of 1830 support and retest of that level from underneath as a newly found resistance, that could trigger deeper corrective pullback, targeting this zone here as a major point of interest for the bulls. 1810, 1800, possibly even 1790, where the price would meet a rising trend line, and also this would be a fib retracement zone as well. Lastly, let's talk about crude oil. Crude oil appears to be correcting in overall uptrending markets. The key trading level for crude oil is at 80. That's psychologically important round number. As long as that level holds, bears are in control. Shorter term intraday bears. So basically, if we see a rally from this support down here at 75 into 80 and a rejection, that would be bearish. Or if we see a continuous selling pressure and the loss of 75 and end of day close below that level, that could open the way for deeper corrective pullback towards 73.30, 71, possibly even 70 over a longer period of time. Alternatively, if you see a rally from here, so support, falling support, resistance, falling resistance, sideways channeling formation, rally from 75, push through 78, in particular breakout above 80 and end of day close above 80 could open the way for the spike higher, targeting additional resistance towards 80, 60, 81. Only the breakout above that level could open the way for the higher levels to come towards 80 to 80, 84, possibly even 85, 70 over a medium time frame. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.